Okay, we're going to go on to Chapter 5 of our government accounting. And so we're going to be talking about capital projects, debt service, and permanent funds. Oh, look at that. That's really cool. Looks like a parking lot. I don't know what they're building and where the mall's at. But there's a big old building, metal, being put up in the mall. I'm not sure if that is going to be retail or if it's going to be another hotel or if it's going to be a government building. Anyhow, just thought I'd tell you guys. Okay, so what are we going to be doing? We'll apply the modified accrual basis of accounting and recording typical transactions of capital projects, debt service, and permanent funds. We're going to prepare the fund basis financial statements for governmental funds, classify and identify appropriate fund reporting for trust funds. So remember, we have there's 3 different methods of accounting. There's cash, there's modified accrual, and there's accrual. And you need to remember which one to use in which situation. Modified accrual is where we're going to report the expenses on an accrual basis, but we don't necessarily report the revenues on an accrual basis. Sorry, I was trying not to sneeze. Is hence in reference to what we call it modified. Again, annual budget is used, but budgetary schedules that are not necessary. If control of purchase orders is relevant, use encumbrance type of accounting. You use encumbrance maybe for capital, but not for debt service because that's more specific to the amount. Those are like for bonds and whatnot and loans you owe. Okay. Don't report long-term assets or long-term liabilities on fund basis balance sheets. That's because you're only looking at 1 year's worth of data. Long-term asset purchases are treated as expenditures and no depreciation is recorded because you're looking at what the immediate 1-year cash requirement is. Long-term debt proceeds are treated as other financing sources. So here we go. Capital project funds. Those are going to be your fixed assets. They are restricted, committed, or assigned. Would not include those capital additions properly reported in an enterprise fund, for example, water treatment plant. Here is construction or acquisition of, for some reason, I got in my head bridges. Oh, there we go, bridges. Long-term assets such as buildings, bridges for government funds. Proprietary, that's those that we're using for business. They do not require the capital funds project fund. Accounts for issuance of bonds and receipt of other financing resources. Accounts for construction acquisition does not report the long-term asset in the capital projects fund, treated as expenditure in the fund. I am so sorry. I'm gonna spend most of this lecture coughing. Again, we're looking at, in reference to these type of funds and this reporting, we're looking at 1 year's worth of data. Okay. So how do we get capital projects? Well, you can be bonds, grants, taxes, transfers from other funds, donations, interest earned on funds held. I was, because this is what I do, I went to Good Morning Yuma and there was the superintendent of school district number 1, and he was talking about there's a new bond proposal on that we will be voting on in November. And it's basically to remodel school funds and expand some programs or remodel school buildings. I guess some of those buildings are older than dirt because Yuma's been around a while and they need to fix them up and get them, so they maintain the integrity, the construction integrity, and they're able to be used continuously. So anyhow, so that's an example of maybe a capital project fund that's going to be happening, but and they're going to go out and seek bonds to be paid back by the voting constituents. Long-term bonds are not fund liabilities and governmental type funds. Assume a 12 million of bonds are issued to fund a capital project. And so there you see, bond proceeds are considered another financing source on the statement of revenues, expenditures, and changes in fund balance. Bond proceeds is not a revenue per se, but is considered a current inflow on the activity statement. Some jurisdiction may require a separate fund for each building project. You can see the examples down there. Other major projects are financed through bond issues, which limit the use of proceeds to a specific project. Reporting objective, making sure that your funds are traceable. Debt service, this accounts for restricted, committed, or assigned. Sinking fund and payments on bonds, payments on long-term notes. So basically you're transferring money into the debt service in order to pay off these long-term liabilities. It accumulates resources to pay principal and interest on long-term debts of the overall government. They are not used for any type of proprietary activities. The debt service accumulates the money and makes the principal and interest payments. Transfers typically from general fund, but also they could be, from other sources. Just depends on what the contract's set up as. Taxes earmarked for debt service. That would be, for example, so let's say, this passes, the Yuma School District number 1, that bond passes. So they're going to go out and they're going to issue the bonds. And then as property tax comes in, that property tax that pertains to this bond is going to be set aside and transferred over into that debt service in order to pay for that bond interest that's going to happen. Exception to expenditure recognition under modified accrual. Most expenditures are recorded when the liability is incurred. However, interest and principal on long-term debt, it's recorded when due, but there is an exception. And so this is talking about here accruing the money because it's you need to accrue it in the previous month of the previous fiscal year. Types of debt. Serial bonds, I like to call those Captain Crunch. Transferred and payments are made and little or no balance exists at the end of the year. Term bonds. Bonds become due at an end of a term, maybe 30 years. You could even have them when they where those bonds mature at in varying dates. Deferred serial bonds may not start the payments for 2 to 5 years after the bonds are used. Term and deferred serial bond situations, debt service fund acts as a sinking fund. Sinking funds mean you put money into it and you just hold on to that money and you don't use it. Permanent funds used should be to account for and report resources that are restricted to the extent that only earning and not principal may be used for purposes that support the reporting government's programs. Okay, here's some of the characteristics. Contribution of a principal amount from a donor, which is to be invested in perpetuity. Earnings in the fund are designated to a purpose that benefits the government or its citizens. And here's the summary accounting for trust. Review of fund financial statements for government type of funds. You get your balance sheet here. Statement will have columns. You get revenue minus expenditures plus or other financing sources plus or special items. Change in fund balance beginning and then equals your ending. Expenditures are displayed by character classifications, current, debt service, or capital outlay. Oh, Roswell. I've been to I know this, Georgia. I was going to say, I've been to Roswell, New Mexico. I actually got posters hanging from Roswell, New Mexico in my office. But that's not the same Roswell, is it? And there we go. And that was very quick. This should be a very easy chapter for you guys, and we will see you in chapter 6.